Alright guys, welcome back. So this video is going to dive a lot deeper into liquidity and really understanding it. So if you haven't watched the video that I put out on liquidity, that will also give you a really good insight, okay? And there'll be a lot of stuff in there that you most likely haven't heard before. So this question actually came from that video, and he said, nice video with lots of insights. Quick question. The area of liquidity, for example, the top area, may have sell limit and buy stop orders. When institutions take the liquidity, is it the same to the market no matter what kind of liquidity order there is? Okay, so from what we understand about the market, right? The market moves from areas of liquidity to liquidity, okay? So it uses liquidity to move through areas of imbalance into other areas of liquidity. So what do I mean by that? So let's just take this as a quick example, okay? Just like here, right? We'll be moving up, okay, and pulling down. As we start pulling down here, this move here, right? People will sell at this level, okay, or they'll sell down here somewhere, right? Wherever they sell, and they'll put stop losses above this level, right? So their stop loss will go above this level. So this is a buy order. Obviously, if they're selling and they need to get out of the trade, this is a buy order. And at the same time, there's most likely going to be a lot of liquidity above here from the buyers, right? Like from people wanting to buy the breakout, okay? So we've got a lot of buy liquidity above here. Again, exactly the same on the reverse, okay? We can see that we're pushing up, right? And we've got a pullback here. So a lot of people are going to buy here, and they're going to have their stop loss here. So these are going to be sells, right? Again, alternatively, people are going to look for these lows to be broken, and once the lows get broken, like this big candle here, okay, then they're going to sell, right? Exactly the same as this big candle here that breaks this level, right? Big candle that breaks it obviously gets people involved in the buyers. So now obviously we know that we've got liquidity down here. So liquidity just means orders, right? Whether it's whatever kind of order it is, okay? And or even if it's not an order, obviously once we start moving up, people are going to get FOMO'd in and start buying, right? You think, again, if this was in real time, right? As soon as this candle starts printing and people see this and we've broken structure, a lot of people are going to start thinking, oh, they're going to sell, right? Even if they haven't put an order in, because they don't want to get FOMO'd out of the trade, okay? Most likely their stop loss is going to go above there. Same with here, right? So even more sell liquidity down here. So as we move down into the liquidity, right, we can see we've got a high area of liquidity down there. Okay, and it would most likely probably be more in this sort of level. Obviously, stops below here, and stops below here, right? So obviously, if this was like someone's trade, okay, before it gets to this point, let's just clear some of this stuff off. So it's going to look like this, right? We're going to have sell stop orders there, right? Targets above there, okay? A load of people that have got orders all the way through here, right? Right, and we're going to have a load of sell orders, something like this, right? From all the people selling here, okay? So loads of people getting involved, getting FOMO'd in all the way through here. Right, so obviously you can see that this grouping there's a lot of sell orders around this sort of area, okay? So what happens here, right? We can see that price pushes up above this level, right? We know that there's liquidity above this level here too. So the institutions buy up into the liquidity, okay? Same here as well, right? And then they sell down into an area of liquidity, right, where they then accumulate positions, okay? This here is accumulation, and then take the market higher, right? Like accumulating all the liquidity, basically buying the opposite sides of all these trades. So stopping this trader out, taking the opposite position, taking this trader out, taking his position, taking this trader out, taking the position. Same here, right? Taking the positions against all these traders, okay, and then rallying the market up. Very similar situation is most likely unfolding here. This is either going to be a form of redistribution, Okay, so basically the market accumulating orders, tapping down into an order block to then take price higher, or we're going to have again a form of not a form, we're going to have some distribution, right, where we're entering out of these buy orders, okay, accumulating some shorts, tapping into an order block and then coming down, right? Okay, and obviously this happens on all markets, right? This is what we're looking at here is Bitcoin. Okay, so it doesn't matter what market we go on. We could go on any market. This is it's gonna play out the same. Okay, so if we just drop down into this area of accumulation inside of this liquidity zone, right, we'll see a very similar situation just on a lower time frame. Okay, so let's drop down to a 5 minute, something low, right, and we'll just lighten this up a little bit. So I'll just run through, I haven't seen this before, right? I can go anywhere on any chart, right? It's going to be the same. The principles of how price moves using liquidity is going to be the same. So the first thing I want to do is I want to just draw out all the swing points, okay? So we've got a swing point there, right? Okay, so this is what's happening inside of a bigger liquidity void. Okay, obviously we understand that on the higher time frame, this is a bigger liquidity void, right? So this is just literally a zoomed in version of this area here, right? So this is what's happening on a smaller time frame. And obviously a lot of you understand that the market is fractal. So I've got quite a few videos now on the fractality of the forex market, and it is a really powerful thing to understand. So if you're not familiar with that, check out them videos, right? So let me just run you through what's happening inside of this zone, right? This is what we call Wyckoff accumulation, right? Where banks are basically accumulating buy orders, right? So they're, basically accumulating buy orders to take the market higher. Right, we've got a swing point here. Again, above every swing point, just understand, again, I'm not going to go into too much detail, that there is liquidity, okay? People are putting orders below these levels and there's liquidity below these levels, right? So we push down, we pull up, we've got an area of liquidity, right? We pull down and we create an area of liquidity. What happens to that? We move a bit higher, this liquidity gets taken, and then we push up, creating another area of liquidity, right? This can be seen as sort of one area. We use the liquidity above that area, or in this zone, to push down and take the liquidity below this level, okay? So we use the liquidity below this level to push up, tap into an order block through here, and then we take this liquidity, using that liquidity, okay? So again, price just moves from areas of liquidity to areas of liquidity, using liquidity, right? We use the liquidity below here, we use the orders below here to push up, we pull back down, generates more liquidity, okay? Tap into an order block, again, another form of liquidity, and then we move higher and take that liquidity. Come down, tap into an order block again, okay, generating some more liquidity before running higher and taking the top side liquidity. Okay, again, something that I haven't drawn on, but creating more liquidity below this low here, right? We then move down into it, we take it, propelling us to the top side liquidity, okay? We get above this liquidity, we take it, we use it to push down into an order block, creating liquidity, right? Generating more liquidity above here. The market starts moving higher, okay? Creating liquidity as we go. Pull down under this liquidity, we take it, push up higher, create some more liquidity, we take it, take out all of this liquidity down here, and then bang, strong push up, taking this liquidity, right, pushing down, creating more liquidity, which we then accumulate orders above, okay? We then take it, creating liquidity on the bottom side, which we push higher, use the top side liquidity to take it, creating more liquidity, which we then push up from using this liquidity. We take it, and then from that top side liquidity, we take the bottom side liquidity, right? And you can see that there's a theme, right? We take that, generate more, use that to take this. And again, if we was just to zoom in on this area here, this is just going to be an even smaller version of what's happening here. Okay, so this area here is what we call reaccumulation. Okay, so basically reaccumulating orders using the liquidity generated to take the market long. Okay, very, very similar to distribution, but we'll get onto that because that's going on to another topic, right? So I hope you got value from the video. I hope that answers your question. If it does, great. If it doesn't, leave a comment and I'll try and answer it a bit better. Let me know more specifically what you're not understanding and I'll see if I can answer it. So again, I hope you got value from the video. If you did, be sure to hit the like button and subscribe to the channel, and wherever you are on your trading journey, I hope you have a good week and I'll see you on the next one.